In today's episode, we are going to look at which three Tata companies look really good from a long-term SIP investment format, which is medium to high risk appetite players, right? So I'm going to look at three things that are really good, that have very good growth potentials, growth triggers. But what we're also going to do is we're going to be a little unbiased on this. We don't want to be biased with any stock. So what we're going to do is we're going to look at the positives, and then we will look at the antithesis, or we will also look at the negatives of these stocks and what might go wrong and why it won't play out. Now, just because it's a Tata stock doesn't mean that it has to do well or it will do well. There are so many Tata stocks that did not give great revenue or did not give great returns to shareholders in a very long period of time. Now, the first company we're going to look at is a company called Tata Motors, right? From a chart perspective, it looks wonderful. What is happening with the chart perspective? It is currently trading in a beautiful ascending channel or an upward channel. So this is looking really good. And if you look at the price right now, it is in an upward, down, up, down kind of a momentum, which is very good. It's doing a very good theory as well. And I think fresh momentum or fresh buying momentum will start once it breaks its all-time high of approximately 1069 or 1070. If it starts breaking, this company will start going up really well. Now, Tata Motors has been doing really well in the last few years, mainly because of a couple of growth triggers that have kicked in. Now, we all know that one of the biggest growth trigger for Tata Motors, and it is a long-term growth trigger, is the EV production business, right? They are in the EV space. They are creating cars left, right, center. They are spending a lot of money in marketing these cars as well. And that is why Tata Motors is doing well, because they have almost 70-75% market share in the passenger vehicle in the EV space, right? But what are some of the other growth drivers that they currently have? Now, another growth driver is something called Jaguar Land Rover. Now, obviously, Jaguar Land Rover is something that is a big part of Tata Motors revenue as well. And JLR basically delivered a record revenue of approximately 7.4 billion pounds in Q3. Again, that is a lot of revenue, and it was up almost 22 to 25% since the last 1 year, right? Now, even the EBITDA margins doubled for JLR. So JLR is a company that is also creating free cash flow in this business for them, and this is a worldwide business. It is not an India-based business, and their order book right now is currently standing at 150,000 units, which shows that more revenue can come in the next few years. In fact, they also have the new Range Rover Electric coming into the picture, and they have basically received approximately 16,000 registrations for this just 28 days after unveiling it, right? Now, if you look at Tata Motors, they have two types of businesses. One is the commercial vehicle business and one is the passenger vehicle business. Now, recently they have come up with the news that they want to demerge this company. So Tata Motors will be split into the CV business, commercial vehicle separate, and the passenger vehicle business will be separate. The passenger vehicle business will have the EV, will have JLR and all the growth triggers that are there, and the commercial business will be completely separate. Now, obviously, if you look at it from a long-term perspective, passenger vehicle business is going to do well and might do well for the foreseeable future, and commercial vehicles is maybe mid to high growth that is currently there in that space, right? In fact, they also have some EV products in the commercial vehicle business that is also doing well. Now, let's look at the breakup of these two things and how the revenues are looking at from these two perspectives. Now, if you look at the commercial vehicle business, the revenue basically grew by 19% and the EBITDA was at 11.1%, which is fairly decent, not bad at all. And over 150 new product variants were introduced. In fact, they have also got an EV product called Ace EV, which has approximately 2,700 units on the road as well. Now, coming to the passenger business, the PV business is obviously booming in India for them. They are doing really well. They have also started a new plant in Sanat called Plant 2, which has commenced production for the Tata Nexon. Now, Tata Nexon, both the EV and ICE, which is doing really well, and they have very good strong record of units in Jan of approximately 53,600 units, right? Now, if you go quickly and look at their fundamentals, it is currently trading at 18 PE, okay? Now, obviously, looking at a PE, we can't tell whether it's good or bad. So I will go and look at historical PE. And historical PE, it has traded around 18 itself, right? And I usually try comparing it with Mahindra's PE as well, because Mahindra, even though it is not exactly in Tata Motors space, but it's good to check the PE. So they're at 21.5. So I would say Tata Motors is currently fairly valued. Okay, market cap of 3,63,000 crores that is there currently right now. Market cap to sales is less than 1. And if you see the revenue mix in FY22, this is slightly old data. 67% was coming only from JLR. That is why JLR is very important for them, and it was a very good acquisition they had done. Now, if you look at the revenue in Tata Motors, it is definitely growing. After COVID, it has gone up quite significantly, and EV is definitely taking a nice margin boost for them as well. And they have started becoming profitable. The only biggest drawback that is there with Tata Motors, the only problem problem they had is with the reserves and borrowings, right? They have always been a company that has very high debt. As you can see, the debt was quite high in 2021, 2022, and then they have started reducing the debt quite drastically in the last few years. In fact, Tata CEO has also come out and said that we are going to be net debt positive with all the companies going forward. So they're reducing debt across the board, which will be a very good shareholder driver for this company. Now, if you look at the antithesis, what is happening with Tata Motors is that yes, they have market dominance, but two big factors are changing in India. Number one, I don't know if you saw the new EV policy that came out, but they have a new policy which says any new player that comes into India and invests around 5,000 crores in India can set up their own EV plant and start selling their own EV cars with an import duty of just 15%. That means this will give a very small distinction between Tata Motors and the new player that comes in with an international brand, like say BYD or Tesla or VinFast. Now, another big problem I see with Tata Motors is India is weirdly moving into an SUV market, right? We are enjoying SUVs more than sedan cars, and SUV ka king currently is Mahindra, right? So Mahindra is doing really well on the SUV sales, whereas Tata's SUV sales are not that great and they don't have a very good car in the SUV demand space. So that is another antithesis that I see out. Definitely it is not going to significantly impact their growth, and if they continue to reduce their debt, then this is going to be a long-term SIP booster that will definitely do really well. Guys, by the way, just a disclaimer before we go into the second and third company, this is not a stock recommendation video. This is just to understand the thesis of which Tata company looks really good right now. Okay, it is not a buy or sell recommendation. So the next company we will look at is IHCL. We have done a deep dive into this company as well. Now let me give you a small brief about it. Good things about IHCL is market cap is 84,000 crores. IHCL is basically your Taj hotels, but it's not just Taj. It has a lot of other brands under it like Ginger. It has Chambers. It has Taj Sats, which is the airport airline catering business as well. So they are, and the Cumin business, which is their weird fast food kind of a thing, right? But they are doing really well. And if you look at the PE, as you can see, the PE is at 72, which is significantly high. But if you look at the stock price, it has given wonderful growth in the last 1 year, right? So the PE is definitely high right now. And what has happened with this company is very shocking, because see, this company was not moving at all. It was not a return. As I told you, there are some Tata companies that are not given returns at all in a very long period of time. So if I show you the price in the last 10 years or a max chart, this IHCL has not given returns at all. Only after COVID it has started flying, because a fundamental switch happened after COVID, which was not happening before. The fundamental switch is that earlier IHCL or Taj Hotels, which is the major revenue driver, used to buy land and then build their own entire resort, and then they used to start selling it. So they used to do a build and operate, which used to cost significant amount of money, and it also used to take a long time for them to set it up and start actually getting the operation. So payback period used to become a very long period of time. Now what they have done, they've become smarter. They've started doing like a profit share agreement. It's also called as a management contract. They find somebody who already has a massive land, they lease on that land, they build a Taj property, and whatever revenue they get, they split some amount of it with the owner. So for the owner is just sit and nicely make money, right? So when you start doing that, obviously the revenue, whatever comes, margins will be slightly lower, but then at least they can start very fast and they don't have to spend significant amount of capex that is there. Right now, cash flow wise, also Taj is doing really well in this year. They have started becoming well. The only one problem with IHCL is that their international business is not doing very well, which is their London business, their New York business. The hotels over there are not significantly giving good returns, which is a sad point over there, right? Now coming to the antithesis. So please understand, IHCL is a very seasonality based company. Obviously, if the season is there and people want to go spend, they will go spend in these places. So the good point is there is a lot of people who used to not stay in Taj before have started staying in Taj, but also Taj is expensive and there are other companies coming or other hotels coming at a slightly cheaper rate, giving the same amount of luxuries, right? So seasonality is there. India's consumption theme is very important, because tomorrow if we go into a recession or we stop spending too much money, then this company might not do really well, right? So another big problem with this company is long gestation periods for the new hotels. They take approximately 2 to 3 years to start setting up new hotels as well, and it is capital intensive if they don't do managed contract. What they have also announced is in this year they are planning to open almost 100 hotels, including Ginger and Taj, not all Taj hotels. And in Ginger they have more than 50% margin, which is crazy, right? So they're planning to open around 100 hotels with an inventory of 2,200 rooms, and their current average revenue rate per night is approximately 12,000 rupees. So these are some interesting facts that you should definitely check out when it comes to investing in this hotel, right? So that was the good part, and I also told you what the antithesis was. Now the third and final company of this is going to be called Tata Elxsi. Now Tata Elxsi has been our favorite from a very long period of time, or was my favorite for a very long period of time. But I remember getting out of this, and I'd also posted on the YouTube community as well, when it reached a point of 10,200, because at that point the P ratio went to 107, and I was like, boss, how can a P ratio go to 107? It's just too much. It has to fall down, because it was a massive growth driver and the stock price was shooting up. But the minute it went to 100, boss, I said, I'm scared, I'm getting out of this stock. And that's exactly what happened, because the median P should not be above 50, right? Even now I would say this is overvalued. IHCL is also overvalued. Only Tata Motors seems very okay. And if you look at the financial analysis of this company, it has been a very good revenue growth driver. It has been playing out very well with the margins in the last 5 years, and it has been giving shareholder returns as well. So there's nothing wrong fundamentally with the company, and it is a future proof company as well. It has given good returns. Only problem with this company was that it was trading at extremely high valuations, which people were not comfortable of, right? So that was the biggest problems. Now let me tell you some of the key highlights about this company as well. So apart from the PE, what else might go wrong for this? Let's look at the antithesis. One of the biggest problem of this industry is that slowdown in global economy might happen. So whenever US gets affected, all the IT companies in India get affected, and Tata Elxsi is heavily into media communications, healthcare and transportation. So anything over there in the automotive business, if there is a slowdown, then the revenue will start getting hampered over here. Another problem is currency risk, geopolitical risk. Any problem that happens with respect to USD, dollar, trades, sanctions, import sanctions, some problem happens, then this guy gets definitely affected as well, right? Another big problem is either if the big deals go away or they have slow addition of new clients, that also becomes a big issue. And the fourth issue is, yes, they are still trading at a very high premium of 60 PE, which is not good at all. It has to correct. Even though the stock price has been doing well, the market, stock price has not gone up, even though the revenue has been doing well. So that means the market is still not comfortable to buy this, and they still feel it is slightly overvalued. And the biggest competition to this guy is another company called KPIT. And if you actually look at KPIT's business, or if you look at KPIT stock, it is also trading at 75. So this is also literally at overvalued position, and as you can see, it is definitely falling down because the market is not comfortable today to give such a high P to IT companies at this moment. And the final antithesis was that 86% of the revenue of Tata Elxsi comes from just one segment, which is embedded product design. So there is huge concentration risk when it comes to investing in Tata Elxsi as well. So guys, these were the three companies that we looked at today with respect to what is the good points and what is the antithesis as well. Again, this is just a research video. This is not a buy or sell recommendation. So I would suggest please do your own research before investing. Do not buy it and then comment saying I bought it, what happened, why is it going up or why is it going down. If you do your research and you do it well, then you know exactly why it's going up and why it's going down. Okay, so I hope you guys like this video, and if you want me to do more videos similar to this, then do let me know in the comment section below, and I will make some videos for you as well. This is me, Shashank Udupa, signing off guys. Take care. See you guys. Bye.